This is the Friday, June 23rd, 2017 version of the Market Plus segment. Joining us now is Naomi Bloom. Naomi, welcome back.
Thanks for having me.
Well, we are excited to have you. We've got a lot of questions for you. And so we want to kick it off here with one from Tim in Crookston, Minnesota. We saw this week be pretty brutal on almost all of the row crops. I mean, pretty well across the board. Tim wonders how much new crop wheat, corn, and beans should a producer price on this or the next weather market?
So new crop, right?
Yes.
Okay. So with what we've had, I would say for new crop, you should be 20% sold to 25% already.
Okay.
So with the recent run-up we had last week with $4 futures for that new crop, I think a lot of orders were triggered because guys had said that they were going to be pulling the trigger at that time. So I would think we're about 20% sold. Now going forward on the next push higher, I would get to 40, but no more than 50% sold, just because of the very variance in the crop sets out there.
Okay.
But also I'm thinking down the road further where with this wheat thing, it's a huge deal for the Dakotas. And I'm very curious thinking long term if we see fight for acres need to be aggressive in those areas, and maybe wheat gets some acres back. So wheat always leads the big rallies historically. You wouldn't think so, but it does.
And can Minneapolis lead the big rally, or do we need Chicago to catch on and get those spec funds interested?
That's a great question. I'm not totally sure, but I'm just thinking of, you know, when I started in this 15 years ago and I would call out to the Dakotas. When I called out there, guys were talking about the canola, they were talking about sunflower seeds, they were talking about wheat. Nobody talked about corn, nobody talked about beans. And so now those places are growing corn and beans. And so would the price get high enough again where they would be like, I'll plant some wheat instead?
Yeah.
I mean, the acres switch that has happened in those two states is substantial. So, and we're not through our growing season at all yet. You know, I left Wisconsin and the corn is ankle high, bad. Yeah. Not looking good, ankle high.
Yeah.
It's been replanted 3 times. The crop conditions between Illinois, Indiana, and Ohio are only like 58% good to excellent, and normally they're 75 to 80% good to excellent. So even though things in Iowa look pretty good, they really do, I don't think you're going to carry the whole country, gang, you know, for Iowa.
Right. Iowa, Nebraska, I mean, we've had hail, we've had tornadoes, I mean, severe wind.
Yes. So
do you think that, I mean, and you said it on the program, trend line, is that your top end now for yield
would be
countrywide?
The top end, and I'm thinking the funds are kind of back to saying, prove me otherwise.
Okay.
But yet when I read other analyst materials out there, most of them are saying probably like 167, 168. And if that's the case, assuming demand can stay constant, carryout goes down to 1.8 billion bushels, which is a big drop from where we are right now. And obviously it's a plentiful supply of corn. But boy, does it put the pressure on for next year already.
Yes.
So this might turn out to be pretty wild and exciting.
Okay. Now, would you be willing to be 40% sold if we get a weather rally during the month of July, say, 40% sold in new crop beans, knowing that we still have the month of August ahead of us, given this challenging growing season? Or would you be a little more
good question.
cautious?
I think I might rethink my statement there.
Okay.
Okay, so I kill house plants. Let's just establish that. I'm
Okey-doke.
not an agronomist by any means, but my clients who are agronomists have told me that with the plants being so short this year and not having the great growing conditions, apparently, if the plant doesn't have the ability to get tall, less nodes are on the plant. So if there's less nodes, there's less pods. So that could in and of itself be another whole reason where all of a sudden you're like, oh, maybe we don't have the crop out there that we thought, because the good to excellent category, like corn, is 67% good to excellent, and a lot of it isn't great.
Okay. All right.
Good questions, you guys.
Interesting. Now, and actually, I'm going to change things up on you a little bit, Naomi. So while we're talking about the wheat market, we've got a question from Marty, and he's up in Buxton, North Dakota. Marty's seen those acres switch. He's on Twitter at SatMonster. Marty wants to know, what's your take on spring wheat stocks come September 2017? And then let's look ahead a year. What do things look like in September 2018?
I don't know is the answer. And like we kind of talked about on the show, the situation up there is actually, it's dire. It is not good. As you and I were just talking before, you know, some of the guys are cutting it, baling it, right?
Yeah.
Right? So that's not going to be wheat. That's a bigger deal. So I don't know. We don't know what we're up against here. And I think the market is saying that by skyrocketing as high as it has. But even reading some other analysts out there, some like big ones, they're saying they don't even want to put a high price point on this market yet. And these are guys who are normally bearish, put a price on anything. And they're saying, no, we respect that this is an issue.
It's a huge issue. And if let's say this crop is, I mean, we know it is terrible. Let's say it's truly terrible. We're in a situation where we could run out, for all intents and purposes, of high protein spring wheat. Is that correct? That's my understanding. I mean, given the demand for it and given the potential of this crop in the Dakotas to really be bad, what happens at that point?
I don't know, Mike.
$22 in the cards?
I don't know. Well, the last time Minneapolis wheat went, it went to 20 bucks.
Yeah, back in 08.
Wheat leads the
But
big
we
rallies.
had a story then of commodities being something that people wanted to put their money in, right?
This is
Crude
true.
went nuts in 08.
Yes.
Corn went nuts. Wheat went nuts. Is the story, the narrative, different in what year are we? 2017. I was still living in the past. I was going to say 2014. Can we change the whole commodities story with a Minneapolis spring wheat rally?
That's a huge point. The answer would probably be no, because back in those years, all the commodities were on fire.
Yeah.
Everybody wanted a piece of the commodity pie. And now if you look at what used to be the CRB index is now the Goldman Sachs Commodity Fund Index. It stinks. Commodity prices are horrible.
Yeah.
They've been in this like kind of a sell signal. So we had a bit where everything rallied, but that index is measured with crude oil leading the way, and crude oil prices are back down in the low 40s. Probably going to stay there for a little bit until we see some production cuts somewhere. But we're going like crazy in the United States, and OPEC has said they're going to cut back, but everybody else around OPEC is now like, awesome, let's take advantage of the situation.
Exactly, yeah.
Yeah, so it's going to be interesting to see. I don't know if the spring wheat can be its own lone wolf and just do its own thing in the cash market.
Oh.
This is going to be interesting to watch.
All right. We'll learn something this year, regardless.
We always do.
Yes, we do. So now, final question for you, Naomi. Last time you were on, you did a little bit of math, and you do quite a bit of math.
I like math.
Every day. You like math. We know this. So last time you were on, you mentioned the fact that well, and I'll let Andy in Iowa ask it. He's on Twitter at @AKleinschmidt. Thanks, Andy, for the question. He wants to know, or he says, I wouldn't mind seeing the math or logic behind the prediction or the probability you made last week that we had or last time you were on, we had a 70% probability of hitting 440. And was that in December corn?
It was front month futures. So it's an awesome question. It's a 4-minute answer, everybody.
Okay.
So
get your pens and paper
out.
out.
That's right. We're going to do it.
Okay.
We're going to do it.
Show us how you do it.
Okay. So how it came about. Last fall, our company, we have an awesome research team in our Market 360 department. These people are way smart. So, they were thinking, we have this huge crop. Will the price ever come back ever again? Doom and gloom. So the brainstorm happened of looking back at history, when we have record crops and cruddy prices at harvest, looking at the next entire calendar year.
Okay.
How high does the price of corn get in that following calendar year to try to dispel the theory of the price would never come back?
Okay.
So you go back to 1971. There were 14 years. I love that you're writing this down.
I'm taking notes.
You are making my
I've got a
heart
lot
so
to learn
happy.
as well.
Okay.
Okay.
So 14 years that there were record yields.
Okay.
Lo and behold, in each of those 14 years, the following year, the market rallied and it went higher than you would have thought it ever could.
In every one of those years?
Yeah. 14 years.
Wow, okay.
Okay, so then what we did, using front month contracts, you then see where was that harvest low price, and then front month contracts is the key.
Okay.
And I didn't get to get that out of my mouth the last time I was here.
Gotcha.
And I would have thought the rally would have happened by now anyway.
Yeah.
But in those years, the rally happened sometimes in the spring, sometimes in the summer, and sometimes in the fall. So this math probability isn't over yet.
Okay.
Okay, so in each of those 14 years, we measured where the low price was to the high price the following year, and then gauged the percent value that moved.
Okay.
So it was anywhere from 17% rally into the next year, some years being like 150% rally.
Okay.
Who would have thought?
Yeah.
So obviously there's very different fundamentals happening in all of those years. Okay. So then you look at all those 14 years of prices and things, and then you plug in today's value into all of that, and then you're seeing, okay, there is mathematical probabilities for the market price to go higher. There was, and this is data that we published at the Commodity Classic, so this wasn't like I was pulling it out of the air. We were published this data. So there was 88% probability that at some time in 2017, the price of corn futures would get to $4. So, hey, it happened.
Yeah.
Now, using the additional math logic because so 2017 isn't done.
Right.
70% probability that we could see the corn futures get up to the 440 to the 450 level. But at this stage, it's going to take a weather issue and things like that.
And that's a 30% probability that it won't.
Right. So that's why I called my clients and said, we've got $4 corn. Make sure you sell some.
Okay.
Yes.
And otherwise, keep an eye on the weather.
So it's a math probability, and it's based off of when you have a record crop.
Okay.
What can happen the following year. And Mark Gold all winter long was saying the same thing.
You will get a chance to market profitably at some point.
Yes, and because he said when you come off record crops the next year, he said the same thing.
Okay. Well, now, Naomi, before we let you go, and hopefully all of you are taking notes, and can they still find your research, your Stuart Peterson research?
Yeah, if you go on our website, you can have access to it. You can email me.
Okay.
We can email you the white paper that we handed out at the Commodity Classic. Absolutely. We love math because it takes the emotion out of marketing.
That's right.
And that's how you make better marketing decisions.
Perfect. Because I know we had several folks ask that question, so now you know. Reach out and you can get that math in your hands. Yep. Now, Naomi, before we let you go, we have been taking questions from students at Iowa State University, ag students. We encourage all of you to send in questions, whether you're a student or not, and you can learn more about this project by going to the Market to Market, or the M2M podcast rally, number 143. And so anyway, this is the latest installment of our ag student questions from Iowa State University, and this one is from Craig, so he'll be right on the screen.
What should I be doing in my last year of college preparing myself for the first few years out of college?
Big question.
Well, let me tell you what I did for my mistakes.
Okay.
And it was come off thinking that I'm going to get a job where I'm going to make great money. When I started out at a commodity brokerage firm, I made $16,000 a year, and that was my salary. I had to work a job part-time, waitressing, for 2 years. And I said, you know what? It is what it is. I understand this, but I'm going to work hard, and someday everything is going to be just fine. And so obviously you have to work hard every day. But one, don't go out thinking that the world owes you anything. Two, take advantage of those internships. Do everything. I mean, even though you're a senior, you can still find an internship. It is invaluable to have that on your resume. And if you really think that you're going to be focused in on a certain aspect of agriculture, go into a store, like a parts store, and introduce yourself to people and get your name out there and make sure that you can communicate, shake a hand, talk to people on the phone, use your words, you know?
Beyond emojis and texting?
Yes, exactly, because the communication aspect, especially I think in our facets of agriculture, are so customer service orientated. And in our society where customer service stinks half the time, it is so refreshing to have a human who can do a good job and actually provide value. And also make sure you still make time for having a little fun too.
Yeah, yeah, which
that's
I think if
important.
you're a senior in college, you can probably manage that. You've
Yeah.
had 3 years to practice.
Yeah.
Or in
Yes.
some cases, 6 years to practice before you got to that senior year.
Yeah.
Yeah. So, Naomi, thank you so much for taking the time to join us this week. Always appreciate your insight.
Thank you for having me.
Join us again next week when Sue Martin will sit across from me at the Market to Market table and we explore the recovery from a double whammy of weather on the Palmetto State. So until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.